Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. Today's Stock Market Live is going to talk about growth stocks, tech stocks, bank stocks, and whether or not it's the right time to buy. Catching these stocks at a big dip right now, which are a very, very big percentage off of where they were even just 4 months ago, or whether or not things are about to get worse and we should be being patient, waiting for better ideas and better timing. So we're going to spend a little time today talking about relative strength, relative weakness, pockets of opportunity where there might be some buying opportunities right now, which for the most part has been in energy stocks. I'm going to see if that is shifting a little bit right now. We have a lot of stuff to cover. Stock futures are getting pounded right now over the weekend. Looked like the market traded into what we call a bullish U-turn on Friday afternoon. Didn't follow through on Thursday, kind of went sideways and closed above the open. I'll show you what I mean by that. So we have a big list of stocks we're going to take a look at today. We're going to determine if you should even be looking to buy as a longer term trade right now. And if we're going to be looking on the short side of things, are those same growth stocks that are getting hit pretty hard right now? We're going to take a look at PayPal. We're going to lead the charge with that one. Should you be short selling those stocks, buying puts, or just leaving it alone if you only understand buying stocks? So we have a ton of stuff to talk about today. I'm really excited. CPI numbers coming out on Thursday. We're going to take a look at that as well. Stick around. Be back in just 1 second. Okay, so thank you so much, everybody. Really appreciate you being here. I'm going to do my best to provide some value for you today, hopefully give you some insights and some stock picks that you might not have considered. If I do a good job today, if you could please do me a favor, make sure you hit down and hit that subscribe button. I'd really appreciate it. One thing I want to talk about today is stop losses. Again, we talked about at the end of 2021, heading into this year, we knew quantitative easing was going out the window. We knew that interest rates were going to start to rise. They're doing it now and doing it in a very meaningful way that's scaring the bejesus out of a lot of people right now. So we're going to take a look over. We're going to head into some of the ideas that we're going to be talking about today. I just want to say hello to LJ. Good morning, LJ. How's it going, pal? Hope you had a nice weekend. So we're actually going to break it down over here. You can see the futures are down 86 points at this point. And really what we want to talk about are some of these kind of ideas. PLTR, Palantir earnings fell short. So again, if you are a regular viewer of the channel, which I hope that you are, we spend a lot of time on these earnings and what we should be paying attention to when the earnings numbers comes out. Far too many inexperienced traders and investors, quite honestly, just look and see, oh, Palantir had a big earnings contract last night that they got. Their government contracts are going up, but it's the expectation. We're paying for tomorrow. We're not paying going backwards, and the guidance going forward. If I could just bring this in here in a little bit of a bigger way, stock is tanking because of guidance. Guidance fell short of let me actually bring that in for you. With the June quarter guidance that fell shy of previous Wall Street forecasts. So that's what we're looking for. So let's remember, there are two things that we're looking for to see some of these stocks explode to the upside after earnings come out. Palantir did not do that. Earnings were okay, kind of what was expected, but the guidance, which is what we're paying for next quarter's cash flow, not what it was expected to be, not what it was actually hoped to be, but really that big expectation word is what we're looking for. So that's going to actually take us over into some other tech stocks. We're going to specifically take a look on the weekly chart, and we're going to look at PayPal. PayPal and Square. Now, you can obviously see here, this is a really big deal. If you've been watching everything with us, you know that we are very big on allowing the stock prices themselves to tell us where and when it is time. So we actually broke the trend here, right there at around 266.53 was where the price of PayPal reversed. Now, why am I talking about this one specifically? It's because PayPal has some more downside, but it's not where it is right now. It's learning to protect your gains. Probably one of the biggest things that new people have when they come into the boot camp, especially now in 2022, unfortunately, is they are stuck in positions and now frozen and afraid to make a decision. And again, this is all for educational purposes, but I want to give you some insights into what we talked about, especially on our new bootcamp coaching call last week, which we had a lot of people saying, I'm stuck, I'm afraid, I don't know what to do. Some of the ideas that I had from 6 months ago, even a year ago, a lot of these stocks, again, if we go over here to the chart, this is not that long ago. We're talking about July. We're talking about September. It was $291. This is more than $200 to the downside. So how do you handle that? What do you do at this point? I get a lot of people asking me how I would personally trade it. But let's first get to the point where that is the symptom of the problem. That is not the real problem. The root cause of the problem is not knowing how to identify when order flow changes, and just as importantly, not having a plan for what to do if it changes. I hope you are not one of those people that just the market always comes back and look, yeah, you could make all that argument that you want for the big blue line going up since forever, practically, but especially since the March of 2020. And a lot of people made a ton of money on paper, but absolutely had no idea how they did it, which those kind of profits now they're in peril simply because you didn't have a plan for if the road turned and we started going in the other direction. So I'm going to tell you again, this is for educational purposes. This is what I do as an active trader. Number one, holding those losing positions right now is the symptom of not having a plan, not understanding how to recognize when the trend changes. So again, one of the biggest things we want to point out, you might want to take a snapshot of this chart, is obviously we're going all the way back to 2020. And this is the area. And actually, you know what? We can actually go over here because this right here is where it could have changed, but it didn't. And this is actually the box right there. And it actually took off and went back again. So once it broke here, right in that spot right there, that's actually where it changed and broke to the downside. So I want to get this across to you. And again, I want to say this very clearly. This is for educational purposes. But if you were my friend and you were asking me for a suggestion on how to manage these losing positions right now, I want to give you a higher level thought process on how professional traders handle these kind of situations. And it really comes down to, I want to make that money back. I am not going to sit in a position where I have absolutely no control over the outcome. I personally, I will be reducing these positions so I can get back buying power, so I can go and make that money back. Now, here's the reason most people don't get out of these trades. And there's two very, very obvious reasons. Number one is you are stuck because you didn't have a plan in the first place and you are tied to not making a mistake. Number two is you're afraid that as soon as you get out of the position, it's going to move up and do exactly what you thought. The problem is the market conditions have changed dramatically. We're going to get a big, actually, let's take a look at that. Inflation numbers coming out this week, which is here. Stock market taking a beating and it won't end soon. So obviously on Wednesday this week, we're all looking at the CPI data. That is really the big thing. So if you want to know how this week is potentially going to unfold, we're obviously have the futures opening up big down right now. Tech stocks are getting hammered. Palantir is now below $10, down near the $8 level. We're going to take a look at NVIDIA. We're going to take a look at AMD. There's a bunch of really big tech stocks that we've been trading and trading them pretty aggressively, quite honestly. But we've been trading them on a short-term basis, have not been building longer-term positions. We've been trading momentum. We've been trading cash flow. So what I want to walk you through today in these momentum-type stocks, growth stocks, these stocks get hurt as interest rates go up simply because it's costing those companies more to borrow. So if you could just think about the common sense part of it, where I know Jason Hammond's on this call right now, where last week in the boot camp, he actually posted some pretty good data on where we are now compared to where we were and how overvalued some stocks were in 2021. But just being overvalued doesn't mean that you should get out of them. But those conditions that created the overvaluation have changed dramatically. So if you are trading and holding or investing some of those growth stocks right now, you need to admit to yourself that those conditions changed, which means now you need to change your game plan. So again, I want to give you what I would do. This is an educational video. I would be scaling out of these positions, getting money back into my trading account and using that money to make back the money on the losses. If that's not what you're thinking about right now, that's just simply because we need to elevate where we are right now and think of yourself as a business owner, that if you have inventory on your shelf that went rotten, you have to get rid of that inventory as best as you can, however you can do it, put it on sale. Like when I had my deli, we were like, Saturday, chicken salad sandwiches, we got to get it off the shelf. You have to get that money back and now put that into new ideas to make that money back. So here's the biggest suggestion. Again, if we're friends, how I would be handling it right now, I want to get my head back on straight. I want to get as much of my capital back as possible and then go look for new ideas. That's how professional traders handle these kind of ideas. Now, you might be tied to the position. You might be convinced that it's a longer term investment. That's fine. You still need to have a line in the sand that tells you this idea is killing me right now. And if the market conditions worsen, you're going to be sitting in that frozen as opposed to looking for new opportunities, which we're actually going to do today, because there's been some opportunities just looking at these guys right here. Let me actually bring this in here. So as the market has been getting pounded, these kind of ideas have been the ones that have been easier to see the relative strength and looking for longer term. Again, longer term is very relative right now. The energy side of things, and I'm going to rattle off a bunch of stocks. Now, here's the biggest thing I want to point out. We have something in our community called the bullish echo. The bullish echo simply means a stock that is an obvious buying opportunity for a swing trade, but it's too far beyond the optimal entry. So in that case, you're going to put that into your watch list and then either day trade that or wait for the next pause. Because remember, we make money on the push, we manage risk on the pause. So I want to go down into the daily charts of some of these ideas right now on the energy side of things. And you can see again, a pause, a trend, a pause, a push, a pause, a push, a pause. We're pulling back a little bit right now. So this is actually pretty healthy. I'd love to see a couple of days like this, maybe pull back to this breakout and then look for the new long. So what we're doing right now is we are setting up our next idea in this strongest stock group of stocks that have had relative strength. Now, I want to say this because obviously we like to talk about stock picks. We like to talk about where we're going to buy. We like to talk about profitable trades and that kind of stuff. What's probably not discussed enough right now, and especially since the market has turned, is whether or not you should be in the market at all right now. And I get a lot of feedback. Like I see Abraham posting some stuff in here. Look, Abraham, everybody has their own resources. Everybody has their own goals, quite honestly. And here's the biggest thing I want to talk about, okay? Don't be stupid and sell your position now. Everything is down. It doesn't matter which company you're long. As long as the market goes down, this will lose and the market will turn soon. Abraham, I understand your thought process, but that means you haven't traded through a bear market yet. Inflation is not really good right now. Inflation, as a matter of fact, we're waiting to see on Wednesday whether or not it's slowing down. But even if it's slowing down, there's still going to be some pain ahead because interest rates are also going up. So look, again, this is all for education. Abraham, I really appreciate your insight. And that's the whole reason of why we're having these types of calls. But let me ask you a question. Let's say that you're retiring sometime within the next year and you have your entire 401k in the stock market. The fact that the market goes up over the last 20 years is not going to help you as your portfolio takes a 50% hit into about to retire. So again, everybody has different objectives. Everybody has different timeframes. I'm talking more right now about if you are holding longer term positions, okay? If you're holding longer term positions and whether or not you should have gotten out of those trades but didn't. Here's the big thing, okay? We can't go back and undo being stuck in these positions. Successful people take action in the moment and take control over what they can do right now. So again, these are educational videos. There's nothing else we can do about what happened in the past. We can only decide to take action right now. So you have to ask yourself, are you willing to sit in the current market conditions with these positions moving against you and hoping the market comes back as the economic data that's coming out right now is forecasting we're still going to see some more downside? I am not telling anybody what to do. I'm telling you what I would do as a professional trader. So Abraham, maybe we have a little bit of a different time frame. I'm not necessarily talking about holding these stocks over the next 10 years or along those lines. We're talking about now, the next quarter, and into 2022. If it was me, and that's exactly how I handle losing positions, if they're not working out, if they've clearly proven themselves that that idea is not going to move in the direction I expected, I scale back. And again, I didn't say get out, so don't misquote me. I said I scale back to get that buying power back so I could make back those losses in other opportunities. And I think one of the biggest things that a lot of people don't understand or don't really factor in is the mental aspect of sitting in those losing positions, staring at them. And now you are not open to new ideas because you're frozen in those ideas. So again, I just want everybody to, I'm not telling you what to do. I'm telling you what I would do. I scale back and then I look for new opportunities to make that money back. So, and let's just talk about this. So I want you to know that I appreciate everybody's opinion. There's no doubt about that. Okay. But the market will turn soon. Nobody knows that right now. Not me, not anybody, not Jim Cramer. Nobody knows that right now. That's hoping. Right now, we are in a 6-week move to the downside. I did a video last night where I was looking for the market to turn back up. And actually, let's show you why and what we were looking at. We were looking at Friday's price action, which was here. So this kind of signal right here is what we saw here. So we were looking for this kind of move off of that reversal pattern. We didn't get it. Remember, momentum reversal patterns versus bigger bearish moves to the downside. These are short-term moves to the upside, and we need to see 1 week and 2 weeks before we start to look back to the upside. So how are you handling those positions right now? How are you handling your bigger portfolio? That's what we're going to talk about right now, and that's what we're going to dive into in a little bit deeper detail. So we're going to actually head on over into, actually here, let's start over here first. Stock market is taking a beating and it won't end soon. So the question right now is why? Why is that happening? Okay. It's happening because of interest rates. It's happening because of inflation. And the big thing I want to talk about now, we're obviously all waiting for the CPI data that's coming out on Wednesday. Here's the thing to talk about. It's expected to go down a little bit, which a lot of people are saying that inflation has peaked already. But that doesn't mean the entire market's going to reverse as soon as Wednesday happens. We're probably, if the data comes in on Wednesday of what we're expecting, which is it's going to go down a little bit, we might see a short-term move in the market, very similar to what we saw after the FOMC announcement, very similar to what we saw after the last FOMC announcement. But that simply means that the growth rate has slowed, but that doesn't mean it's still not as expensive to go out and buy anything. So let's keep this in mind. All right. So again, what would we be looking at if we are taking a look at some stocks that we want to put into our trading list, into our watch list, right? So the very first thing we want to do is we want to screen some stocks that have minimum criteria. So one of the things that is very, very important right now, especially with how fast and volatile stocks are moving, with the VIX well over 30 right now. So the VIX is the fear gauge. As the VIX goes higher, the volatility in your stocks goes higher, which means that the distance between your entry and your stop loss is going to end up being wider. Also means there's more potential on winning trades. But here's the thing. Thinking as a professional trader, you need liquidity to get in and out of stocks at a relatively easy spot because there's a lot of shares at each price level, which is why I typically look at stocks that have, let me zoom this in a little bit, at least 2 million average shares per day. So if we take a look at the market from last month, really, which is the last trading, we have energy, and energy. But as we just talked about before in VLO, it's definitely overbought, a little bit too far to the upside. So what does that mean? That means that we're going to start to look at some ideas that have paused after this bigger move to the upside. And you can see BMY is still heading to the upside. What is BMY showing? That the biggest thing we want to get across for the theme right now of what we're talking about, BMY and a few of the stocks that I'm going to show you right now are showing relative strength. Sometimes we're looking for what did the stock do. We also have to look for what did the stock not do. And in this case here, BMY has not pulled back with the rest of the market and sold off in a hard way. So what I'm about to show you are some stocks that have pushed up, paused, and did not pull back hard with the market. So these are stocks that showed relative strength, okay? So I'm actually going to go back over into the scanner, and we're going to go back into the screener, and we're going to pull up the minimum criteria that I have, which is right here. Average over $1, over $15, $1.50 average true range, and you can see what average true range is there, and over 2 million. That's average volume, okay? Stocks only. I'm not looking at ETFs. So we're going to first start out with stocks that are showing strength for the last month. Okay, and you can see that list is all the way down to 71 stocks. We're going to look at stocks that are above the 50-period moving average, and that brought it down to 54. We're also going to take a look at stocks that are above the 200-period moving average, and that brought it down to 45. Now, the biggest thing we want to take a look at here is, are there any dominant sectors leading the group here? So we're going to break this down into performance. Now, first of all, here's something I want to bring up that's a really common question that we get when new people come into our boot camp. is that I teach people right from the start that you want to have a bigger list than you probably think that you can handle right now. Don't forget, the bigger list of stocks are stocks that meet the criteria, but it doesn't mean that they're ideas to trade today. They still need to be near the optimal entry. They still have to have reasonable profit targets that make it worth taking the risk. So this is the step that a lot of people miss. So when we go into here and we take a look at the group of stocks and we sort them by performance for the last quarter, okay, you can see that some of these are, if not most of them, are in oil and gas and refining. So here's the question. Why didn't you catch these stocks when they rallied? And this is kind of getting back to sitting in those positions that you were losing in. Because again, I'm basically answering a bunch of questions that we got over the weekend about people that are stuck in positions and what do you do? So I want to tackle it from a couple of different angles, which is number one, what I would do in those positions. But more importantly, why didn't you catch those ideas when they were rallying? And for the most part, it's because you were stuck in those losing positions and you weren't watching. But we have a list of 45 stocks here. Let's actually take a look at that list if you want to screenshot this. Now, the biggest thing I want to get across here is if we go into the overview and we take a break from the sectors, hardly any technology. WDC had some good news last week. IBM had good news on earnings. And you can see actually here, IBM showing relative strength. Again, off of Wednesday, Thursday, and Friday, did not sell off, pulling back a little bit with the market right now. All right. The bulk of the ideas, oil and gas, integrated oil and gas, they're here in this group right now. Okay. So here's the thing. We have a lot of people saying, I can't watch that many stocks. I don't understand what I'm doing with those stocks. So I'm going to give you a little bit of lesson right now on how I'm going to be following these stocks this week. So a couple of people talk right now about stocks being overbought. Obviously they are. We just talked about VLO being well beyond its optimal entry. So these lists of stocks right now, which are basically 45 stocks, these stocks which meet good criteria from the 200 period moving average, the 50 period moving average, relative strength for the last 21 trading days, and they also have the liquidity and volatility that I want for new ideas. All 45 of these stocks are going to go into my watch list. But here's the key. The first thing that people say to me is, I don't understand. I can't follow that many stocks. This is actually the same way that I traded stocks, managed when I had my firm in New York City. How did I manage 300 people trading my capital? And it comes down to, you need to understand how to filter those stocks out. So what we're going to be looking for here, and we're going to actually do this in TradingView, which is here. So what we're going to do is I'm actually going to give everybody this list. Let me actually pop that in there. I just want to, so everybody can have this list for themselves. And I'm going to show you exactly how I plan to use this. So first, here's the list. Okay. Here's what I'm going to do with that list. Okay. So you have that bigger list of stocks that are performing right now really well. Now we're going to go over to the screener and put those stocks into the screener. And we're going to let the screener tell us which ones of those stocks that already have buying pressure are also buying opportunities now. That's the big part that a lot of people miss. And a lot of these growth stocks we're going to take a look at, they're on the other side of the market where they've been selling opportunities. So we're leaving those alone. And we're going to take a look at the ideas that are showing relative strength. We're also going to talk about bank stocks in a second. Okay. So if we head on over to FinViz, tradingview.com, we're going to click on the bottom over here in stock screener. We're going to pull up the stock screener, and then we're going to go into performance. So we're going to pull up this performance, and you're going to see that it pulls up different columns. So this right here is what we're going to be looking for, change for the week. So you're going to take this list of stocks. You're going to go into TradingView. You're going to go into Screener, and you're going to go over here on column setup. You're going to type in percentage, and when percentage comes up, we're going to look at change for the week. Now, what that is going to do in that list of stocks that we just gave you, that list of stocks now would change from the week. You're going to sort that by which ones are up the most for the week from a percentage basis. So we have longer term order flow and then current tape reading telling us those stocks that have good order flow are also showing positive bullish momentum right now. Now, what this is going to do, it's also going to filter out those stocks that do not meet that criteria. So you could end up having a list of 45 stocks that might only have a list of maybe 4 that meet that criteria right now. Now, a lot of people are like, well, what about those other 41? That's why am I going to look at those? Well, they're not doing exactly what you want them to do right now. This is how a professional trader manages a bigger list of stocks and brings it down into a manageable list of stocks that only meet the criteria right now. Easily one of the biggest mistakes that people make that come into our community for the first time is their timing is off and they continue to trade stocks that don't meet the criteria. Once you stop trading stocks that don't meet your criteria, you instantly get closer to net profitability because you're not throwing that money away. So that's the first way I'm going to be looking at stocks this week. Now I'm going to give you a list of ideas that I am actually looking for this week. Okay. All right, so we're going to minimize that and we're going to take a look at now. The big thing that I want to talk about are how far are some of these ideas from the optimal entry versus how far have they gone and where do they look today? One of the things I think that's a little bit different about what we do is I don't talk about what happened last week. I'm always talking about what the market looks like right now and how I plan trading it today and this week going forward. So we can only do that right now, and that's what we're going to take a look at. So BMY is one of the ideas that we talked about right here. So again, if you can compare BMY to the way that the market looks right now, you can clearly see that BMY is showing some relative strength. It's down a little bit this morning, but not that much. Okay. Another one that we're going to take a look at that we haven't watched in a while is CTRA. So the market pulled back Thursday and Friday. CTRA held the bid and closed near the high. So I'm looking for CTRA to get beyond 33 as a new idea today. We're also going to take a look at KMB, which had this monster gap over here after earnings, obviously, has not really done that much. As a matter of fact, if we go over to the weekly chart, you can actually see that it has 2 melted candles here after that announcement and some pretty big resistance up in this area over here, right around 140, 142. But although it's trading a little bit lower right now, this reversal candlestick was still above or right around the support level right in this area. So I'm looking for KMB to find a bid this week as well. Another one that I'm looking for is Cardinal Health. Again, bullish. Here's the big thing now. This is where we really start to take a little bit of a deeper look into the stocks. The market sold off hard last week. A lot of these tech stocks, a lot of these growth stocks got hammered. Cardinal Health, although it had a huge move to the downside and recovered after earnings, I want to see if you can pick it out. What actually happened in the stock that was different from last week? Now, you could actually make a case that it's just pulled back pretty deep, but we're still holding this longer term move. As a matter of fact, we held it to the point. But what's the big thing that we noticed in this stock right now? 1, 2, 3, 4 days last week, buying came in and it closed above the open, which is another reason that it's in my watch list today. So I want to get this across. And I want to get this across clearly. You're going to see headlines all over the place right now about how the market is getting hammered, how tech stocks are getting hammered. Palantir had bad earnings today. Guidance wasn't good. That's going down again this morning. Fight the urge to be bottom picking. Fight the urge to be picking these stocks that are continuing to go down, which we actually talked about PayPal before. Even Square took a big hit to the downside as well. Let me actually pull Square up. Square actually retraced this entire $50 move, and it's actually down now below 92. The challenge that you're going to have right now is finding ideas that make sense while the market's going down. So again, if we're in the room together, which obviously a lot of people here are in the room right now, we're going to be looking to short sell the growth stocks, which are not growing right now because interest rates are going up. We're going to be looking to buy stocks that are showing relative strength, and that's it. We're not going to be looking to bottom fish stocks that are getting hammered right now because there's a lot more room to the downside potentially. I do not want to be stepping in front of these ideas because it's just a low probability trade. We really won't know more until Wednesday. Wednesday is really when the CPI number is going to come out, and we're going to have maybe a little bit of a rally. I don't know. But my game plan for this week is I'm continuing to look for short sales in in technology stocks, which actually takes me over to the next group of stocks that has some pretty interesting news out today, which is here. Okay. Fed rate hikes are good for banks unless they end in a recession. So what does a recession mean? Well, it's consecutive quarters of GDP growth slowing down. We actually have that right now. So that's why the bank stocks right now are not rallying, because we are not seeing the GDP growth that is expected. And technically, we're in a technically, I'm not saying we are, technically, based on data, we are now heading into recessionary areas. We have actually been looking at WFC. We've been looking at Citigroup. We've been looking at Morgan Stanley. We've been looking at JP Morgan for a bottom. And actually, we thought we had that on Thursday and Friday, but we didn't. So we'll take a look at Citigroup right here, which is actually down at $50 right now. We actually punched down, looked like this was going to be a breakout, and it's actually trading lower right now. So basically what I'm trying to get across is the bullish environment is not here right now. I just can't say that. I'm trying to answer a bunch of questions that we got over the weekend without giving specific advice. I am shorting right now a little bit more on the aggressive side. I am not looking for energy stocks to rally because they're too far from the optimal entry. And I'm looking to be in technology stocks, specifically PayPal, Square, Net, UPST, and AFRM right now. I want to give you a couple of other ideas that I am looking at that have recently rallied, pulled back the last couple of days, and these stocks have shown short-term relative strength that I'm looking for buying pressure. Okay. One of them is WDC. Now, again, this is very similar to what we looked at before in KMB, where they had a giant move, but this was not off of earnings. This was actually off of the earnings was actually over here. This is off of the potential that the stock is possibly going to be split in two, and two new companies emerging from it. But here's the thing that I want to talk about on these kind of ideas. Remember, we keep talking about we have bearish order flow to the downside and short-term momentum, and we're really trading the long-term bearish order flow, which is why, again, we keep talking about managing risk and managing the downside. Some ideas like WDC, and I'm going to show you one other one that's in the top of my game plan today, have had recent really strong bullish order flow, which is relative strength compared to the market, but pulled back on Thursday and Friday and are set to open lower this morning. Because of the longer-term bullish order flow, I am looking to buy the lower opening on these stocks on the first sign of strength after probably the first couple of hours today. So we're talking specifically about WDC. So you can see it's actually down here at 58 and change. So I'm actually looking for this stock to push down, find buyers at this same support level, and then actually rally. And I am looking for Run to do exactly the same thing. Now, Run only had a few days, but Run actually had here, as we pointed out last week, Run had obvious exhaustion into accumulation, and then earnings, and now we're seeing a profit taking from earnings. There's a lot going on today. I'm trying to encapsulate everything to set up this week without giving too much of a obvious bias on one side or the other. The big picture is still pointing down. The entire market, I think, very similar to last week, waiting for the Fed announcement, is waiting for the CPI numbers to come out this week. So we're to really encapsulate everything in the trading mindset for this week, it's short term. I don't know if there's any other way to say it, whether it's a short-term momentum move to the upside or bearish moves to the downside. I am trading short-term, and my swing trade activity has reduced dramatically. The VIX up at the levels that it's at right now are telling us that there's going to be a lot more volatility. So now you need to be going into the week asking yourself, how do I plan to trade all of these different headwinds, or do I plan to be in cash? I've actually had quite a few emails from people from our mastermind program right now saying that they don't understand the big picture. All the economic data is confusing to them right now, and what should they do? We actually came to the conclusion that they're going to be in cash until the picture clears up a little bit. So there's a lot going on. What I'm trying to do right now is I'm trying to answer a bunch of questions that we got over the weekend about people being confused right now. And I think the biggest one right now is them being caught in bad positions. I know Abraham and a couple of other people were talking about holding on to those trades forever. Look, I mean, everybody has their objective for when they're going to need that money, their objective for whether or not they are close to retirement or whether or not they're 10 years away from retirement. But look, the bottom line is this. If you've only traded since the bottom of the March 2020 lows and you've only experienced that big move to the upside and have not experienced a significant move to the downside, all I want to do is bring to your attention that the market can possibly continue to go down. I don't want it to go down. It's a lot easier if it goes up. All I'm hoping to do is to maybe shake you out of the thought process that the market always goes up and we're always going to get bailed out. This is a very different market condition right now because quantitative easing is gone. As a matter of fact, we're on the other side of that right now where we have quantitative tightening and 0% interest rates is gone. And we are absolutely going to see higher interest rates this year. So the market conditions have changed, which means you need to change your plan because the conditions are dramatically different from what they were in 2020 and 2021. So I hope that at the very least, I'm inspiring you to think about what your objectives are for your trades right now. If it was me and what I do in those situations when stocks move against me a little bit more than I expected, the first thing I do is I scale out. I try and get some of that risk off the table, and then I take that capital and I go to look to use it in other ideas. Again, I'm not telling anybody individually what to do. I'm not a registered investment advisor. I don't have a fiduciary. This is all for educational purposes. I'm telling you what I would do as a professional trader. I want to get my head back and I want to go and look. I just gave you a big list of stocks that are showing relative strength. I would be looking at those stocks to be looking as buying opportunities to get that money back while those other positions are not doing exactly what I wanted them to do. It's such a touchy way to talk about this because I'm not telling anybody exactly what to do, but I'm telling you exactly what I would do, which is get my capital back and go make that money back. So there's a lot going on right now. And yeah, John, actually, that's a good point right now, John. Shorting more than long. Exactly. And the reason I'm also not talking about shorting as much is because a lot of the feedback that we get in the comments are people who don't want to short, don't understand shorting, and prefer only to be on the buy side of things. So what that means is you're only going to be looking at one side of the market, trying to validate what you want to see, and you're going to tend to ignore what's actually happening. So there's a lot going on. The market is very volatile right now, and it's scaring a lot of people. If that happens to be you right now, just really, really think about what you want to do with your exposure to the market right now. And please, whatever you do, don't have the strategy that the market always comes back, because that might be true in the long run, but that might not be true for the next 9 months. And you have to ask yourself, how much of that are you willing to sit through? You can always get back in. That's really what it comes down to. And a lot of people are afraid that as soon as they get out, it's going to do exactly what they wanted it to do. Hoping is just not a good idea. It's really not a good idea. And I hope I hope that I'm at least making you think about a different strategy than saying it always goes up, because right now the market's in a very, very different condition. All right. All right. We're going to call it a meeting. I have to head on over to our game plan. If you have any questions, leave a comment below the video. I promise I'll get back to you as soon as I can. Have a great day, everybody.